What's in store from here? Atul, are you able to hear me? We've just lost his audio. We'll come back to him. Parhash, clearly, we have come off those 21,000 levels. 2941 is what we're trading at. If you see in terms of the advanced decline ratio right now, on Nifty 50, it is actually in favor of the declines. Let's quickly take a look at the top gainers. Names like JSW Steel, HCL Tech, NTPC, L&T, as well as the HDFC Bank. These are a few of the top gainers in today's session. On the losing end, some bit of profit booking coming in with regards to Adani Enterprises, Adani Ports, Hero Moto, a BPCL which is down in trade, as well as M&M. So this is what the large cap space is looking like. If you see in terms of Bank Nifty as well, almost 120-point rally is what we are seeing. But again, that, after the RBI policy, from the highs of 47,170 that it hit in intraday trade so far, it has come off substantially and it's gone to a low of below 46,800 as we speak. So a sharp decline coming in there, but the advanced decline ratio on Bank Nifty is absolutely 50-50. Let's quickly pull up the PSU Bank Index as well and see what the action is looking like on that front. There you go, 0.4% lower in terms of where the PSU Bank Index is concerned. And specifically, you have AU Bank, Bandhan Bank, PNB, SBI, Federal. These are few of the top losers in today's session. We have Atul Suri back with us. Atul, clearly if you see a 21,000, profit is back in action as well in terms of business. A good day as well. But what do you make of this, taking into consideration that the MPC announcements have also come in, policy rates unchanged, and if you talk about GDP, the forecast has been increased by 50 basis points, a summation of what's in store for the markets? We've lost Atul Suri yet again. Harsh, what's the action you're picking up in terms of broader markets?
Well, yes, broader markets clearly underperforming in trade today. We're seeing quite a bit of underperformance from the broader markets, down around 0.1%. In fact, it's just fallen off, post that RBI policy, and that's where we're at. Let's quickly pull up the constituents, which are the top gainers, top losers on the Nifty mid-cap, if we can. Largely what we're seeing is that the banking stocks, especially the larger banking stocks, are doing quite well in trade. You're looking at, within the Nifty mid-cap 50 gainers, you're continuing to see traction. The likes of an REC, Z, Coforge, and NMDC, all of which are gaining over 1%. REC continues to gain over 2% in trade today. And when I'm looking at the Nifty small cap as well, in terms of the key gainers in trade, you're looking at the likes of, within the Nifty small cap, at the likes of and Alok Industries, which is gaining a solid 4% in trade today. You're also looking at RBI Bank, 4.5% higher in trade today. GMR Airports, obviously buzzing on the back of all that's happening with regard to bulk and block deals. But quickly switching focus, I also want to point out the Nifty IT index up around 0.5% in trade today, which is a key positive because we have seen the IT index under pressure. But on a day like this, it's gaining 0.5%. Let's also quickly pull out the constituents there. We're seeing good traction across IT, which is a positive. Yes, that's where the constituents are. You're seeing HCL Tech, Coforge, LTI Mindtree, all of which are up about 1%. The only losers today, TCS, which closed its buyback yesterday. Tech Mahindra also marginally in the red, and then you have L&T Tech, which is around, which is trading by a cut of around 0.4% or thereabouts. That's where we're at, Hiral.
Absolutely, and the rate sensitives after the RBI have been an absolute focus. Let's just quickly pull up the real estate pack and see what the counters are doing in trade, because that's been of a focus area as well. Consumer durables is another space we should be watching out for. Realty, there you go, 0.6% higher is what we're seeing in today's session. Let's pull up the names as well in terms of counters. Indiabulls Real Estate, Prestige, Macrotech Developers, that's Loda, Soba, DLF, all of these counters which are trading in the positive. However, you are seeing pressure with regards to Phoenix Mills, Brigade Enterprises, as well as Oberoi Realty. I think we have Atul back. I think the line has been slightly patchy. Atul, welcome to the show. My question coming to you is, firstly, profit is back in business. You have Nifty, which has hit at 21,000. The monetary policy outcome, rates unchanged, and you have inflation, which is going to be of top focus area. Growth forecast increased by 50 basis points for FY24. All of this, how does that summate for you, and what do you make of it for markets from here on?
I think the markets have had a great run post the state elections. We've seen a real kind of vertical move, and I think that India definitely is showing global leadership. What is more interesting is the fact that I think that a lot of the global macros are falling in place. For example, commodity prices are soft, especially Brent, which really is very, very important for India, has come off a fair bit. And most important, I think, asset class in the world, which is the US 10-year bond yields, that also seems to have come off. So I think that the world is set up for a good equity move. In the short run, obviously, I think things may have got a little stretched, more so because of some of the domestic factors. So I think that that may kind of cool off in the next few days. Also, the kind of leadership that you're seeing in stocks is kind of narrowing to a few small and mid cap plays. I think the larger piece is really missing. So in the short term, one may have a correction. But what's more heartening for me is the fact that the global macros or the global pieces are falling in place. So I do think that we will see a very good move in global equities. And obviously, India should also be a beneficiary of that.
Right, Atul. Harsh also joining in. Let me quickly have your take with regard to where you see rates going and how quickly do you see the taper? Do you expect this to be the last status quo of the RBI, or do you expect that to probably get pushed to February?
Well, I do think that that the RBI is going to be very watching the US Fed very closely, because at the end of the day, that is the mothership, and the US bond yields as they are, they have kind of cooled off. So I do think that the RBI is going to be more driven by that. Also, one thing is, remember that we have elections coming up in the early part of next year. And I think the RBI would be a little careful on, doing massive cuts or kind of stoking inflation, because inflation is something which no government likes to have near elections. So I feel that it would be a little later and more, I think, driven by what's happening globally.
Right. Atul, clearly, if you see from here on, we were just talking to a couple of other analysts as well, which are, specifically CK Narayan, who was indicating that a December ahead of elections has always been an outperformer. If you have to look at that space pretty closely, and if you have to see that outperformance to continue up to general elections, what are those pockets you would be betting big on?
So I think that the sectors that I am looking at or I'm focused on and have been for the last, I think, year and a half, is things related to infrastructure, capital goods. I think that these are sectors that are very, very interesting. What I feel is that the capex cycle is going to revive in India. It's already work in progress. And I think that a lot of industries that are linked to this are going to really play out. What you're seeing is very opposite of what happened maybe the last decade, where we were focused on sectors that were more external driven, which was more export driven, and less to do with the domestic themes. So I feel that we are in that phase, and we are very early in that phase where it is going to be domestic driven, capex driven, and I think a revival of the whole industrial cycle. That's why I would favor those sectors rather than the winners of the last decade, which I think are not, again, bad companies, but I feel that they will just kind of rest or relatively underperform.
Right, Atul. Atul, the consensus bet at the moment is private sector banks, especially the likes of an HDFC and Kotak, which have, vastly underperformed. What's your sense on some of those? Because, you seem to be more bullish on the capital goods space, which has already seen a bit of a run up. So trying to get your perspective there.
Yeah, so I feel that some of the private banks, it's a consensus bullishness, number one. So that is never a very good sign. I also see that a lot of people are very well invested in that space. So I feel that until there are some very positive surprises in terms of delivery of numbers, I think that sector, most people may expect it to be the consensus bullish trade. But I feel that relatively it will continue to underperform relative to the market. As I said, that the themes or the trends have changed. And I feel that a lot of underperformers of the last decade is where the leadership is. And mind you, these are spaces which have been the leaders of the last decade. I feel that they are, as I said, consensus bullishness. They're pretty well owned by everybody. So I don't think that you're going to really see some great alpha happening out there.
Right. Atul, we're running out of time, but a quick one. What's the next level that you will be watching out for in terms of Nifty 50? And would you say that this would be a good level to enter markets, or are they still expensive?
Sorry. So my target, as has been, I've been putting it out for over a year, is about 21,500, and this was even when the Nifty was much lower. So I do think that we do have a few more legs left. However, in the short run, I feel that the market has, especially this post, state elections, there has been a bit of flurry, a bit of exuberance. I think that that has to settle. So I think that the market would be, I would be more comfortable around 20,000 than at 21,000.
Right, a 20,000 more comfortable level to watch out for. Thank you, Atul, so much for joining us on the show. And we'll be happy to keep talking to you in the course of time as well to see how markets perform. So that's Atul Suri clearly giving out his numbers. 20,000 is where he is more comfortable with as compared to a 21,500. But that's the target he has been watching out for. Let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit. We'll be right back.
Welcome back. You're watching the Small and Mid-Cap Show on NDTV Profit. We have with us Rajneesh Karnatak, who is the Managing Director and CEO of Bank of India. He's here to, of course, discuss, dissect what these RBI moves, as well as announcements, as well as commentary means with regard to the PSU banking pact. Sir, first off, what do you make of the commentary? In your view, as rates start to go down, as the rate taper starts probably in calendar year 25, how will margins evolve for the sector as a whole?
Yeah, so as far as the policy is concerned, it's a positive thing for the banking system and financial system at large. See, if you see the RBI speech, the real GDP growth has been projected at 7% for FY 23-24. That is something which is very positive. Then food inflation at 6.20 for the month of October. That's also good. CPI inflation projection at 5.4% for the financial year 24 by RBI is again something which is very positive. So all these things taken together and some of the measures that RBI has taken with respect to the containment of liquidity and also pushing the liquidity into the system. That will overall help the financial system. And as regards the margins are concerned, definitely the liquidity position as on date is tight, but definitely the margins will be under pressure. However, with the resources liability side which the banks are taking care of, more thrust is on the CASA, CA and the SA side, and also on the retail term deposit. I am pretty sure that the banking system will be tiding over this liquidity situation also, and the margins will remain protected.
Right. So margins expected to remain protected from here on. Mr. Karnatak, this is Hiral on the side. A question I have with you is with regards to where the connected lending framework goes. What is that expected to look like? And what would that mean specifically for NBFCs as well as cooperative banks?
So we are yet to read the fine print. Actually, we have only heard what the Honorable Governor has said. So what connected lending as far as that is regarded, because of the financial intermediation, the connecting lending happens. Like banks are lending to NBFCs and then NBFCs are further lending to some small NBFCs. That is where the interconnectedness comes, and also lending to some financial institutions by banks and others. So we'll have to read the fine print to understand the exact impact and the theme which RBI wants to say.
Right, so and so with regard to the liquidity facility reversal, which has been announced or rather extended to both weekends as well as holidays, what's your sense with regard to the impact of that on the bank as well as on the sector as a whole?
So because of the tightened liquidity situation which is there at present, this RBI move is there, which is a welcome move. It will help in better liquidity management for the banking system.
Okay. And with regards to where wage revision is concerned of 17%, what's the sense that you pick up? Because you've provided for around 15%. What kind of an impact will it have in terms of numbers?
If you see on the wage revision side, this 12 bipartite settlement is effective from 1st November 2022. With respect to Bank of India, we have already provided at the rate of 15% from 1st November 2022 till 30th September 2023, which was our last audited numbers. So 15% is already provided. The incremental 2% will not have a much of an impact with respect to the wage cost.
Understood. And, with regard to the tightening of risk weights, are you seeing any second order impact of that, both with regard to what NBFCs are willing to absorb from you, whether yields to your loans to NBFCs has gone up? Is there a slowdown with regard to growth as well as your growth projections going forward? Could you talk to us about some of those metrics?
So as regards the increase in risk weights, RBI circular of 16th of November. So on the Bank of India side, if I clarify that on the personal loan plus credit card, we have an exposure of only 8,500 crores as on 30th September, which is our audited number, which is only 1.5% of our global loan book. So that's not a very large number. It's an insignificant number. Sure. As respect to the NBFC portfolio for Bank of India, other than HFC, our outstanding is around 33,000 crores as on 30th September, which comes to around 7% of the portfolio, global loan portfolio. So aggregating the invocation of this circular for Bank of India is at around 8.5% of our total global loan book. The impact of the increase on the risk weight side is that it will impact our CRAR by only 40 basis points. That is the impact which is there on the CRR. We are already having a very healthy CRAR of 15.63 as on the audited numbers, domestic CRAR. So that will get shaved off by only 40 basis points. So that is one point. Now the second point with respect to the passing of the interest rate increase. So definitely when the risk weight has increased for personal loan from 100 to 125 basis point, and for NBFC, for a triple A rated NBFC, the increase in risk weight has been more than 100%. So earlier where the AAA rated NBFC RWA was 20%, now it has increased to 45%. For a AA rated NBFC from 30% to 55%, and for a single A rated NBFC from 50 to 75%. Definitely the rate increase will be passed on to the NBFC borrowers.
And what would the quantum be? Very quickly, sir, if I can have that.
So quantum will depend on so many factors. What is the external rating of the NBFC? What is our internal rating on that NBFC? Market competition which is there, and the kind of portfolio the NBFC is holding. So range can anywhere be between 10 basis point to 60 to 70 basis point, depending on various factors.
And sir, demand is sustaining?
at present demand is sustained.
Sure. Thank you so much for that.
Right, so that's an interesting one, Harsh,
Very
that
interesting.
we are looking at as well. I think extended conversation with other bankers is what we will look out for as well. Thank you, Mr. Karnatak, so much for joining us on the show and sharing those views. In fact, that's all that we have on the show for you now. Stay tuned. Lots more news and updates only on NDTV Profit.